Are your student loans restarting and you can't afford the payment? And on top of that, you want to buy a house one day? I'm Rebecca Foote, and I'm going to give you the 3-step process on how to restructure those student loans so that you can buy a house one day. So let's get into it. Step number 1 is we need to create a plan. So it doesn't matter if you're a first-time home buyer and you've never been through this process before, or maybe you already own a home, but the home's too small because since you bought it, you got married and you have children and you need to move up to something bigger. Or maybe you do own your home, but you have some outstanding debt like credit cards, maybe a home equity loan, an auto loan, and you still have those student loans. We can restructure your debt by lowering those student loan payments. So how we do that is we go to my student loan calculator through LoanSense. So that URL is somewhere around here that you can actually click on a direct link to it. And when you get there, you're only going to put in just a couple small pieces of information. Now, this is free to do so try it out and see if you can save some money. In order to get some numbers, you're going to need to know what your total household income is. So that would be husband and wife if you're married, or just one of you if you're single. You need to put in your student loan information, how much you owe on it and what your interest rate is. If you don't know what your rate is, the average student loan interest rate is 6 to 6.5 right now. And then also you need to know the number of people that are living in the household. So within LoanSense, you're going to input the data, then it's going to calculate the savings for you, and you're going to see your options of how much you can save by restructuring those student loans. So that's step number 1. It takes you 30 seconds, so you can definitely do it. Step number 2 is you're going to work with LoanSense. Now, you're going to talk to them, see if the plan that you picked is the best one for you. You're going to go through your goals and all your options for those student loans, and they're going to help advise you. Then they are actually going to work with the loan servicer to get your student loans switched over to the new plan, and they're going to get any paperwork that you would need in case you were ready to do a mortgage right now. And guess what? This whole process takes 21 days. That's crazy, right? But it can definitely happen that quick. Now, the whole point of doing this is we're trying to lower those student loan payments, because if we free up money that is currently going to student loans, that's money that you can put away and save for that house one day. Or if you're ready to buy now, then it's money that we can put towards regaining back some of that buying power, so you can actually afford more than you thought you could because we lowered those student loans. Then step number 3 is you're going to work with us and complete a loan analysis to see how much you could qualify for when you are ready to get a mortgage. Now, again, it doesn't matter if you're a first-time home buyer, a move-up buyer, or if we need to restructure some of that debt. We're going to walk through an analysis and show you how it can benefit you to lower those student loans. So I'm going to show you one of those right now. And then when we're done, stay tuned, because I'm going to give you some more tips on key mistakes that people make. So I'm going to make this bigger so you can see it. So in this scenario, let's go back to August 2023 when you weren't having to pay on those student loans. Maybe you got pre-approved for a $200,000 loan. You were putting 3% down, so you got a loan amount of $194,000. We have a 6.875% interest rate in there with the APR listed below it. It gave you a total payment of $1,761. But those student loans were starting. Back then, you didn't have it. So fast forward to September, and your $750 student loan has now started. So when you add that onto your mortgage, you need to now factor in $2,511 into your monthly budget to pay that student loan and that same mortgage. Well, what if we go and restructure that debt? Now, this is just an example, so we would have to look at your actual numbers, but this person was able to restructure their debt and cut that student loan down by $500 a month. So instead of paying $2,500, they're now paying $2,011 between that student loan payment and that same mortgage. Pretty cool, huh? But maybe you're somebody that could actually afford that $2,500 and you're comfortable spending that every month. Well, we could still go through the restructuring of the student loan, still cut $500 off that $750 payment, but you're comfortable with that $2,500 payment. So if we back into a payment of $250 for student loans and the rest going to a mortgage, you can increase your buying power from the $200,000 sales price to $255,000. So it just goes to show you, being able to cut $500 off of your your student loan payment can increase your purchasing power on a mortgage by roughly $55,000. So pretty crazy, right? So I promised you those key mistakes that people make. So roughly 13 million people are eligible for income-based repayment and are not taking advantage of this program. So that's a lot of people that are paying more every month than they have to. In fact, LoanSense estimates that about 2/3 of people could actually lower what they're paying on their student loans by switching to an income-based repayment program. And 71% of people fail to get their student loans forgiven because they don't file the correct paperwork every year. That's right. Do you know you have certain paperwork that you need to file every single year in order to get those student loans forgiven? Now, you may or may not know, if you work for a nonprofit, you can get those student loans forgiven for 10 years of working at that nonprofit. If you work for a for-profit business, then it's 20 to 25 years depending on the business. LoanSense can help you with all that. It's really important, though, that you know, do not refinance those federal student loans into private student loans. Once you refinance out of those federal student loans, you can never, ever go back. So you're never going to go back to having income-based repayment programs, and you can never get those loans forgiven. So please, please, please do not do that. And beware, this is huge, because Google has actually banned advertising for student loans because it's that bad out there. There's Russian spammers that their servers are sending you emails. They're trying to hack into anything to get your attention, to get you to refinance those student loans into a mortgage. I'm sorry, not into a mortgage, into a private student loan. And again, once you go in that private, you can't go back to federal. So once they get you to refinance them into a private student loan, then they're hounding you to refinance your house and roll that debt into your house. Now, that may or may not be your best interest. So make sure you're working with somebody that's going to look out for your best interest. Don't just believe everything you see on there. Deal with a reputable company like LoanSense that can help you out with that. Now, it's also important to note there is something called the Fresh Start program. So if you were behind or delinquent on your federal student loans prior to March of 2020, when those loans went into forbearance, you can actually enter into this one-time program. It is for September, October 2023, going through October of 24. Now, with this, you can enter into the program. They will put you into an income-based repayment program. And after making those payments for 9 months straight, they will actually remove all those late payments from your credit report. That's huge. So if you were delinquent or in default on your federal student loans prior to March of 2020, make sure you ask LoanSense about the Fresh Start program. Now, I want to tell you a quick story. This is about a county worker who is a psychiatrist. She had $330,000 in student loans. She made the mistake of just recently refinancing her federal student loans into a private student loan. Her payment on that private student loan is now $4,200 a month. $4,200. Had she went through LoanSense or just called her servicer on the federal program, she could have actually lowered her payment to $1,400 a month. That is a life-changing difference. And the bad news for her is she found out that she was only 3 years away of having her student loans forgiven because she worked for a nonprofit. So make sure you know exactly who you're talking to and you're getting all the details before you sign anything. Because managing your student loan debt aids in home ownership. And that is my goal. I want to get you into a home that is good for your standards and also helps you financially.